Good afternoon, traders. The S&P 500 futures this week sold off below the bull support at 4,087 in huge imbalance candles down to the 200 SMA green line here at 3,948 support. And it did bounce back a little bit, and so far we are consolidating inside of this base. And what usually follows in this formula, when you have a drop and then you have a base formation and the market still persists to go lower, a break below 3,948 will basically confirm that urge for the market to go lower, and this will trigger another drop imbalance to the downside. And we believe this level is going to be the bear meltdown level at 3,117. The reason I call this level a bear meltdown is because it was a cluster of support, and if bears do break below this level, then this is going to be very problematic for bulls, where bears will end up going in a bear meltdown all the way to perhaps maybe the 2022 support. But it would not be good if bulls lose this level. So in the meantime, we're going to be heading towards that level in this potential drop base, and then another drop lower once price breaks below 3,948. So that would be a good trade. And I think that tomorrow may not be the day that it will break from. Maybe it'll do it overnight, where it'll come down to 3,948. This is the daily chart, by the way, so each candle is one day. If we come down here, I think that we can retest the 200 SMA line and bounce back to 4,021, and maybe even retest the previous resistance of this major bear market that we have been trading in. So what would be key is, if we lose 3,948, then we're going to have some heavy downside all the way to 3,817 because of the formula of supply and demand. So again, my overnight market analysis is that we sell off down to the 200 SMA line and bounce from there, retesting of 4021 resistance of the base tomorrow. The real big move will come out when prices break below either support at 3,948 or resistance at 4,021. We are biased to the downside since this is a base consolidation from the recent drop imbalance that we had. A candle follow through close below 3,948 support break is a perfect trade to the downside towards 3,817, which is support from back in early to mid-December. This is when we had the recent CPI data, so it would make sense for us to retrace back to that level. We discussed that tomorrow we could get a bounce and maybe even bounce up until Thursday and sell off from there. I think the sell off might come big next week, where we break below the base. But again, don't try to time the market. Just trade those levels that was discussed on the S&P 500 futures. So one stock that I'm bullish on for tomorrow is Meta. Now, Meta broke out from its bullish falling wedge formation and also got above the 20 EMA line today. Though it did not close below the 20 EMA, price action did break out and close above the bullish falling wedge with strong volume as shown on this daily chart. And when you get such a volume on the daily chart, especially on a falling wedge breakout, this usually leads to some heavy short squeezing to the upside. I've been studying the TTM squeeze for years, and based on this Meta setup, we have already flushed the selling and looking good for a strong bullish reversal back up towards 181 and above 181, easily towards the 200 area. I'll be watching this stock if the market gets any buying momentum going into tomorrow or after tomorrow. Again, like, you want to play these strong setups when the market is bullish. When you see a stock that's bullish, you need to play it in a bullish market scenario. You got to make sure that all the things align in your favor for the play to really get the best of its benefits, the setup. And a stock that I'm very bearish on is Nvidia. Nvidia is topping out and establishing resistance at 238.76, placing all sorts of buyer exhaustion candles. Now, keep in mind, I've been watching Nvidia for some time now. Just looking at the chart here on the daily chart, first we have the resistance establishment at 238.78, 76, and then we have the TTM squeeze that's absolutely hot and just really in need of cooling off, and that comes with some selling. And the RSI, which is the scariest part for bulls, buyers, is that we have a bearish divergence forming where prices could bounce but could reject heavily um, in some massive red candles down to the 200 lows. And even if we come down to the 200 lows, there is still so much room to the downside because um, we are very far away from the 200 SMA line. Price action behavior is very common when price is trending extremely far away from the 200 SMA line. This is one of my favorite strategies, and this is the case with Nvidia. With increasing bearish momentum in the stock market, Nvidia will be the go-to for me at these levels where the risk is clearly on the downside. You can just look at the chart and tell that the risk is just so much higher on the downside. Just make sure to give yourself plenty of time so when the distribution phase is complete, you will have enough breathing room to benefit from the extensive downside that's about to come. The reason I'm confident being bearish in these levels is also because of the China and US tension recently increasing. Nvidia will be heavily affected being in the middle of the conflict because of the chips being the main competition between the two big nations. Whether you see this video today or a week from now, keep your eyes out on this stock during weakening market conditions or increased uncertainty because the stock will pay to the downside. Those stocks mentioned are two of my favorite on the watch list. Now I am watching stocks like Microsoft that's in critical areas here. If Microsoft can come down and retest 245, which is the previous breakout, I think it will have a nice spring bounce reversal reaction to the upside, breaking this downtrend and moving as far as 259 area again. So definitely keep your eyes out on it. This would be a good counter trend move from this massive sell-off at 275. So if we can come down to 245.65 area and get a spring bounce, this would be even you could even get the positioning here at 245 and give yourself a stop loss at 242 area. Or you could wait for it to come back up, enter on that spring reversal, and take profits in the high 250 area. That would be a great trade. And another stock that I'm watching is Google because of all the AI news. It's definitely it's been going down for some time now. It was at 108 back in 3 weeks ago actually, and now we did a drop base formation and then another drop down, and we have been consolidating here at 89 to 90 area. If we can hold support around 90 area, if we can continue to hold 90 area, I think we can definitely get a good bounce to 100, and that's a 10% move on the stock. And keep in mind with the contracts that I'm mentioning, I want you, or the plays that I'm mentioning, if you're doing options, I want you to give it time. Don't be doing short terms. Don't get yourself tangled with short term contracts where by the time the stock does reverse back up, you don't get enough of the move. And Amazon as well, which is another tech. Amazon has been doing good as shown on the daily chart. It's definitely not doing as bad as the other stocks. Placed a reversal right at the previous demand zone here. You can say that this is a demand zone, and as long as we hold this level, we can get a move. Let's draw this trend line too, so we know when we really end up gaining momentum. Usually when the trends are broken, that's when you get the biggest moves. So just looking at this, Amazon can come all the way back up to 100 area, and in all honesty, if we really get some good moves and market ends up bottoming out here, Amazon could really move all the way to 125 area. It is one of the main uh, stocks on my watch list when it comes to tech, because Amazon hasn't been getting any buying. Anyways, that's all for today's video. I hope you all have a wonderful rest of the day. I will see you all in tomorrow's video.